I'll be talking about the number one industry that I'm bullish in moving into 2021. At the end of this video, you'll know why I'm bullish on this industry, some of the stocks that I'm looking at, and some concerns I may have on some of these companies. Without keeping it in suspense for too long, I'm just gonna say it. I'm extremely bullish on the e-commerce sector. It's had a really great run this year, but I don't think that it's done just yet. We all know that this year has been incredibly tough for certain industries such as airlines, oil and gas, and hospitality. Most of the companies within these industries are still down over 40% year to date, and that is not a good look for investors. On the flip side though, companies in e-commerce, software, and technology in general have heavily benefited from all of this. Don't get me wrong, these companies were going to do well regardless. The things that happened this year merely sped up the process of digitization across the globe. So why am I bullish on e-commerce? Hasn't the run already taken its place, and is there even any more room left for growth? In my opinion, there is. In the first half of 2020, the US e-commerce penetration had 10 years worth of growth fit into just 3 months. Looking at the numbers from a different perspective though, only under 35% of Americans are actually using online shopping. And this is in a country that leads the way in technological advancement and adoption. Imagine the room for growth in not just the US, but everywhere else. As a result of this, e-commerce companies have recorded record revenues quarter over quarter, and investors have rewarded them handsomely. I mean, when we're all stuck at home with little choice, we kind of forced into using e-commerce to buy some of our stuff, right? The unfortunate events that's going on this year was actually a major boost to companies in the e-commerce industry. I'd say that they were actually the biggest beneficiaries of them all, other than the glove makers, of course. Look at Hartalega and Top Glove. I wish I invested in them. On this note though, I believe that there's a real difference between these glove makers and the e-commerce companies. I always think to myself, after all of this ends, will the demand for rubber gloves be as high as it is now? I doubt it. It's actually one of the reasons I never invested in any of these rubber glove companies, because I just don't think that this high demand and high revenues are sustainable. I mean, clearly I was wrong because they went up by a lot more than I expected, but I just don't think that these share prices are sustainable. For the sake of the Malaysian economy, of course, I hope it is. And for all of you investors out there, I wish you guys all the best, but I'm just not participating in it. On the flip side, I don't think that people who have tried for the first time and gotten used to buying stuff online are going to go back to physical stores to start buying some of their stuff after all of this ends. I know so many people who say that their parents have actually tried out shopping on Shopee or Lazada for the first time ever this year. We've all just gotten so used to it. Before this entire thing happened, I couldn't imagine a time where everyone would just have a meeting through online call. I mean, how would it work, right? Well, now at work, we're all so super used to it, and even when everyone goes back to office, it's kind of normal for us to use video calls just to hold our meetings. And I see the same thing happening for e-commerce. While its growth has accelerated as I showed in the chart before, I just don't think that it's going to stop here. There's just so much more room for them to expand, especially when we look into the pockets of space within the industry, which is where I'm going to lead into the second part of this video, talking about the 3 e-commerce companies that I really like and will probably hold long term into 2021. The good thing is, all 3 of these stocks, which are actually from different countries, are all available on eToro. So if you want to buy them later on, or own any other stock in fact, don't forget to use our link down in the description to support the channel and start your investing journey. Anyway, I'm not going to go with the usual names on this list. You're not going to hear about Amazon or Alibaba. I'm going to give you some real juicy names. The first stock that I'm going to discuss is actually something that I talk about a lot on our Instagram page, and is actually one of the first stocks that I ever owned, being Sea Limited. You may not know this name, but I'm sure you know the companies that it owns. Backed by Tencent Group, who are also the owners of WeChat, this company of course holds our very own Shopee. I really believe that in the next decade, Southeast Asia will actually be one of the fastest growing economies. In the next 5 years, e-commerce spending is actually projected to grow by more than double for most of the countries in our region. With these kind of projections, Shopee will actually be one of the major beneficiaries, having so much presence in the region. I don't know about you guys, but I actually moved a lot of my online shopping from Lazada to Shopee. And this isn't an ad for Shopee. Maybe it's just because I own their shares, so I want to support them, but who cares? Unlike my personal opinions, the numbers don't lie though. For those of you who don't know, Shopee is actually also available in Singapore, Thailand, Philippines, Indonesia, and Vietnam. In almost every single one of these countries, Shopee is the #1 player, and they've been gaining so much market share from the competitors since the middle of 2019. Do you prefer Lazada or Shopee? Let us know down in the comments below. So obviously they're doing very well in the e-commerce segment. This isn't the only positive news though. Many investors like to refer to them as the three-headed dragon. Other than e-commerce, they also have a very successful gaming business in Garena and an up-and-coming product in C-Money. Gaming and digital payments are actually two more industries that I'm incredibly bullish on, so it's great to see that C Limited is involved in all three. While ShopeePay may face a lot of competition in the region, it's potentially a catalyst for the next leg of growth. What I'm more interested in though is Garena. For those of you who don't know, e-commerce is a cash-burning business. You have to be willing to lose money to gain market share, because if you don't, you're just going to lose out. As an investor in an e-commerce company, I wouldn't want them to save more money so that they can be profitable at the expense of higher growth. It's super important for them to be the #1 or #2 player in the region, otherwise I'd say they may as well not be there. During the stage of gaining market share, who's going to fund all these losses though? For a standard e-commerce company, it could be investors where the company starts issuing more shares, or they can take up loans to just pay off some of these bills. For Shopee, they can rely on their cash cow being Garena. Garena is a company that makes so much money for the C Limited group, but the founders of this group decide not to distribute its dividends but instead to reinvest it in Shopee. I think that this is a perfect business model and at least partially funds some of the losses that Shopee makes. These are the main reasons that C Limited is one of the stocks that I'm the most bullish on, not just in this industry, but as a whole. Add this to the fact that I actually have experience using the product almost every single month, and it's easy for me to have conviction in this stock. I've owned this stock ever since it was $40. As of today, it's nearly $200, but my initial position was a bit smaller than I wanted. Still, I'm going to be continuing adding to my position, and I'm going to hold this stock for the long term for sure. The next stock that I want to talk about is the Amazon of Latin America, being Mercado Libre. This is another stock that I've owned a while back, and even though I sold off all of my shares previously, the story of this company makes a lot of sense, so I've actually reinvested my money in it. Why I like this company is for very similar reasons to why I invested in C Limited. This country is poised for massive growth, and to an extent, it can be even more than what we're going to see in Southeast Asia. Some of the fastest growing countries in terms of e-commerce adoption includes countries from Latin America like Mexico, Argentina, and Brazil, which is actually countries that Mercado Libre have presence in. The population in these countries are massive, and a lot of their people actually don't really use online shopping yet, so there's a lot more room for them to grow. One of the major problems in the area is actually the infrastructure that is not up to the standards of other places that we see in the world. This means that logistics and last mile delivery can be a bit difficult for companies to fulfill. However, Mercado Libre has perfected this, and this in itself is actually a competitive advantage that makes it difficult for other companies to come in. Similar to C Limited, this company actually has different parts of their business other than just e-commerce. As I just mentioned, they actually have a logistic arm that helps with fulfillment and even dropshipping called Mercado Envios. On top of this, to enhance their e-commerce platform, they started Mercado Credito, which is actually a service to give out loans to businesses and merchants so that they can start buying some of their capital upfront, and even give out loans to consumers who are looking to buy stuff. Finally, and perhaps most interestingly, they have Mercado Pago, which is a payment solution system for Latin America. This, together with their credit business, is key for them to drive the Latin American economy, because nearly half of the population is actually unbanked. How are you supposed to sell stuff online if half of your population can't pay for it? Well, if you're Mercado Libre, you'll just expand your business so that you can give a solution to it. Their execution has been really good, and I like the fact that they give me exposure to the Latin American market. Even though this stock is listed in the US, the business that they do is actually in other parts of the world, so I like the diversification it brings me to my portfolio. The last company that I'll go through in this video is the picks and shovels of the industry, being Shopify. This term came from a time when gold was a booming investment. As the price of gold went up, some investors thought to themselves, instead of investing in gold, why don't I invest in a company that sells the picks and the shovels for people to mine gold? I mean, if the price of gold is going up and a lot of people are trying to mine it, I'm sure that the companies that sell the picks and shovels to enable this mining will actually do well as well. That's how I see Shopify in the e-commerce industry. They aren't the same as the Amazons and the Shopees of the world. They actually provide a solution so that merchants can start selling online. Basically, you pay them a monthly fee and you get access to their platform where it's super easy for you to set up your own store and start selling to your customers. They also have many product integrations with a lot of different partners that makes your life as a seller so much more simple. For example, you can connect your Shopify store to an accounting software at a price, where Shopify will then take a cut from the partner. That's a great business model because I'm not just making money from my customers, but I'm also making money from my partners. They look set for success and I'm really excited about their future. I know all of this because I've actually tried setting up my Shopify store. In the middle of this year, I thought that dropshipping would be something that's interesting to me, so I tried it, but it didn't really work out. It was super simple to use though, and I could have everything set up in just a day, which is why I'm so bullish on this company, because if I felt this way, I'm sure that the millions of people who want to start their online store will feel the same way too. And it's not just people like me who want to use Shopify. Kylie Cosmetics uses it, Kim Kardashian uses it, and even Red Bull uses the Shopify platform to power their online business. This shows that a company's product addresses both the needs of small and large businesses, which greatly increases their addressable market. Sadly, I currently don't own any shares of Shopify. I remember back in April when it was $400 and I thought, this is too expensive, I'm just going to wait for it to drop more and then I'll buy. Well, today it's up by 2.5 times at nearly $1,000. I'm going to wait for a better entry point because there will definitely be a pullback, but it's certainly one company that I'm very interested in adding to my stock portfolio. Other interesting names in the e-commerce industry that I didn't mention include Etsy, who focuses on handcrafted and specialized products, and Jumaya, who is the e-commerce platform of Africa. Both of these companies, even though they're small, can also be found in eToro, which is great. Anyway, I've talked about all the good stuff about the e-commerce industries and its companies, but surely there must be some bad things to say about them. As a good investor, you have to know the bear cases for all of your investments so that you can avoid biasness. There are two things that come to mind. First of all, the valuations of these companies are not cheap. The run-up this year makes them very expensive, and for example, C has gone up by almost 5 times. I know, I said that even though they've gone up by so much, they can actually go up much more. I still hold firm to this, but I really believe that there will be a pullback sometime in the next 1 year where we'll actually find a better opportunity to enter. If you don't own any shares though, a good thing that I like to do is actually just put in a small amount first so that I have some skin in the game and I'll continue doing my research and then slowly add on as the price drops. The second thing that is a concern for the e-commerce industry is regarding profitability. I know that I said that I don't mind if the companies I invest in lose money just so they can gain market share, but something that we have to know is that these companies need to have a path to profitability. It doesn't make sense for them to lose money forever, so in the next few years, we need to make sure that they actually turn from a lot of losses to a lot of profits for us investors. If any one of these companies show us that they're struggling to make this change, then we need to reconsider our positions and maybe exit. The potential for e-commerce all around the world is amazing. I didn't really mention Amazon and Alibaba because they're just massive and their countries have actually very high e-commerce penetration. What I looked for is smaller pockets of the industry like in Southeast Asia, in Latin America, and the picks and shovels play. I'm extremely bullish on this industry, but we need to be aware of the potential risks such as valuation and profitability. If you want to start your investing journey and support our channel at the same time, don't forget to sign up for eToro and use our link down in the description below. If you're super ready to start your investing journey but don't know how to use the eToro platform, you can watch our video here. Or if you think that international stocks are not your thing and you'd much rather invest in the Malaysian stock market, then you can watch our Rakuten video here. That's it for today's video, guys. Give us a big thumbs up if you enjoyed it, subscribe, and share it to your friends and family. See you in the next one. Peace out.